You need to learn algorithmic trading right now. But why? Why do you need to learn this field so badly? One of the biggest reasons you want to get into this field is because most investment banks, management firms, hedge funds, and central banks all use some form of quant analysis or algo trading in their investments. Even if you want to trade at your own terms, you can use quant to enhance your earnings. More on that later in this video, so keep watching. Over 60 to 75% of trading in US, Europe, and major Asian markets is algo trading. So this is not a very small field anymore, it's actually quite big. So the future of trading now isn't going to be about intuition anymore, but it's going to be about data-driven decisions. So mastering quantitative analysis, regardless of whether you want to work in a huge firm or you want to do your own trading, won't be an option anymore, but it will be a necessity to stay competitive. So what is quant trading? For the sake of simplicity of the video, I will be using the words quant trading and algorithmic trading interchangeably, even though they are different parts of the field. Quant trading is the branch of finance in which humans are left out of the decision-making process and it is left entirely up to the machine. We basically train models based on historical data, and when we are satisfied with the model, we deploy them to financial markets. Now you might be wondering, why do I need to get into this field? I already make a ton of money by manual trading, or I know people who do. Well, I'm going to list all the reasons below. You might be intrigued. Also, I am going to provide a roadmap right after, so please keep watching. Number one is competition. As I've already said, most financial institutions already use quant analysis, and slowly even manual traders are starting to use quant, some form of quant, into their trades. Unless you have a very small portfolio, you won't be competing with the market, but you will be competing with other traders. And the traders who use quant have a significant edge over you if you don't. Number two is known probability of success. When you train algorithms based on historical data, you can see how well your trade might perform if you deploy it into the financial markets. This helps you manage your risk and also allocate your capital better. Note, you won't be protected against black swan events using historical data because they are unpredictable, but you can always use algorithmic trading to stop a trade or exit a trade after you've reached a certain level of drawdown. Number three is fast trade execution. Now, most manual traders could take seconds, tens of seconds, and even minutes to analyze data and type in their trade. And sometimes by the time they've typed in their trade, the price they actually want is gone. Using algorithmic trading, algorithms can analyze technical indicators, signals, and a variety of parameters in a split second and execute trades immediately, which can reduce slippage and also ensures good entry. Number four is ease of diversification. With algorithmic trading, you can use similar strategies across different markets at different time zones and with different portfolios all at the same time. Now it makes sense, right, why algorithmic trading provides you a huge edge on people who use intuition instead of data-driven decisions. Now let's get into the roadmap of this field and how you can get started or enhance your career in quant trading. I'm going to assume you do not have a STEM degree, so I can list all the fields that you need to go through to master this field. Now, this is a very rudimentary guide. If you want a very detailed guide, I could start working on one, so let me know in the comments below. And also, if you enjoy my content, please leave a like and subscribe. That would really help my channel a lot. Now, if I was you, I would first start with mathematics and statistics. Remember, quant isn't just about learning to trade, but it's also about building a solid foundation in mathematics, linear algebra, calculus, and statistics. I am doing a statistics minor in my bachelor's, So that is helping me a lot in this field. Number two is programming skills. Most quant algorithms are written in some form of computer language. So I would recommend learning Python and C. If you already have a strong foundation in this subject, I would start working on small scale projects that involve utilizing the financial markets or something that simulates real world scenarios. Number three is understanding financial markets. If you do not have a strong understanding of financial markets, risk management, and financial modeling, then it will be really difficult for you to come up with strategies that you can deploy. Highly recommend taking the CFA exam because that gives you a very all round knowledge about finance. Number four is networking and industry knowledge. Connecting with professionals and like minded people on LinkedIn, alumni networks, and professional associations is really helpful because you can learn a lot from other people. And then I will also always stay up to date on financial news, industry reports, and immerse yourself in the latest developments of quant finance. Number five is internships and entry level positions. Whether or not you are in university or have graduated, definitely definitely look for internships and entry level positions in quant finance. And it doesn't even have to be quant finance, it could be any one of the fields I listed above. This helps you get the ball rolling, and you could get connections through these internships and positions that can help you get into the field of quant. Number six is continuous learning and specializations. A lot of universities and online resources provide specializations in quant finance. They are free or could be paid, but they all are highly valuable, and I would really recommend going through some of them. I have listed a bunch of additional tips as well, which includes participating in competitions or contributing to open source projects. If you want the entire guide, I have listed a link down below, so definitely check that out. Transforming into quantitative finance from a STEM or a non STEM background requires a ton of commitment, learning, and development. This is a very hard journey, and if you are really interested in it, do not give up because there are tons of people who get into this field from different backgrounds that you wouldn't expect. Just keep your mind to it, and I'm sure you'll get there. Now, if you enjoyed this video, again, give a like and subscribe, and I will see you next Friday.